All right, we'll get started. Good morning, everyone. Thank you for joining us today. Ever since Satoshi Nakamoto introduced blockchain in 2008 as a core component of Bitcoin, it's been tagged as the next biggest disruption to watch out for. After the global financial crisis of 2008, the desire to have a distributed open ledger for financial transparency has become very strong. One of the big myth out there is blockchain means Bitcoin. Today, actually, blockchain is used across all industry verticals for various things like cryptocurrencies, smart contract, international remittance, managing medical records, universal digital identity, and many, many other use cases. It's almost impossible to keep track of financial technology startup companies that are not leveraging blockchain and distributed ledger today. Every industry vertical is now trying to come up with a standardized blockchain framework. In the financial services, the biggest names like R3, a consortium of 70 plus global financial institutions, have come up and wanted to actually build a framework for banking that's built around the distributed ledger methodology. Similarly, in the credit union world, a collaborative effort among the Credit Union National Association members, Best Innovation Group, and the Mountain West Credit Union Association, along with PSCU and other industry partners, are examining how blockchain can be used for applications within the credit union industry. So Celero joined the Credit Union Ledger Consortium, the CU Ledger Consortium, to be part of the foundational framework, and we want to leverage the solutions and add value to the credit unions of Canada. So we are excited today to bring this session to you, along with our guests from Best Innovation Group and Mountain West Credit Union. As we get into the agenda for the day, just a few housekeeping items. I request you to turn off your phone or computer, make it mute, and during the Q&A period, if you have any questions, please unmute your Skype session and ask the questions. And since our schedule is packed, we'll try to address as many questions within the allocated time. But if we can't address all the questions, we are more than happy to take them away and bring it back to you via an email or some other form. So as you see in this slide, you might have seen the Celero 3.0 architecture vision from the other webinars you attended. Well, we are looking at an integrated and collaborative framework for all the solutions we as a company want to offer the credit unions. Last year, we became a member of the Credit Union Financial Exchange Standard, the CUFX Consortium, to make sure our business analytics and all application development solutions are built on as per credit union industry standard. Since we're envisioning that this framework can be extended to distributed ledger, we recently joined the Credit Union Ledger Consortium. And as we move forward in this journey, we feel that it's quite important to create this awareness about blockchain and distributed ledger, that it's no longer a hype, it's a practical solution out there. And we are going to bring in more of this kind of awareness sessions to the credit union industry. With that, I would like to welcome Rick Constant, Vice President, Innovation and Product Management at Mountain West Credit Union Association. Over to you, Rick.
Thank you so much, Rojan. It's a truly our privilege to be here supporting you folks today. And again, thank you to all the participants on this call. We have some exciting things to show you. We are experiencing a few technical difficulties this morning, but hopefully we can get those ironed out by the time my partner John Best jumps into the call. A little bit of background. I've got a couple of slides here. We'll keep this background as short as we can. Background is background. The cool stuff we'll let John show you all. Initially, we started, actually John and I both started working in the blockchain space a couple of years ago now, late summer fall 2015, we began to, both of us on our own, explore what this technology could do. Um, by March of 2016, we had come together and with a couple of our partners, um, uh, including a company called Evernym, as you can see on that slide there. We came together for a March meeting that was attended by approximately 100 credit unions and CUSOs from across the United States joining us here in Denver. Tremendous interest in the technology and what it might actually result in. In terms of how we structured the initial phase, and we're just wrapping up phase one of CU Ledger now, we started out as a research to action project, meaning we in the credit union industry, certainly here in the domestic U.S., are really good at writing white papers. But it's more. The need is more than that. We need to actually research and take some action. And so we designed CU Ledger as a research to action initiative with the idea that we would demonstrate a credit union owned blockchain and some possible applications. We actually did that on May 2nd of this month. We met with the National Credit Union Roundtable and did a presentation of a prototype, a developed prototype, and showed a real business result. The National Credit Union Roundtable is the top 150 credit unions in the country, so it was well attended, to include many of my counterparts, leagues, and associations as well. The demonstration was flawless. It was very significant, and if possible, we're going to show you what that looked like today. The demonstration was in fact a call center fraud prevention application, and of course fraud is on the top of everybody's mind these days. Credit unions are under assault when it comes to fraud, especially on the teller lines and in the call centers. So what we hope to show you here shortly is something pretty significant. Thank you, Rojan. The CU Ledger approach is unique. Certainly not unique in the technology space, but certainly unique in the financial services space. What we are going to be standing up is something that is analogous to the Apple App Store. CU Ledger will develop a handful of applications to put on the CU Ledger network on the platform. But our goal is to take advantage of the opportunity in front of us. Specifically, vendors are constantly looking for an ability to market, to sell their goods and services, to actually gain access to our marketplace. So we think we can harness some of those groups to our benefit. We have a number of partners that are critical, and I encourage you to take a look at each of them. The blockchain itself is actually provided to us from a partner called Swirls, and it provides incredible speed. That was one of the challenges that CU Ledger had, is how can we make sure that the blockchain itself is going to be fast enough to support not only a national platform but potentially an international platform. Swirls solved that problem for us. John will talk more about that here just shortly. We also needed an identity capability, and that was provided to us by a company called Evernym, as I referenced earlier. Their platform is called Sovereign. I encourage you all at a convenient moment to take a quick look at the Sovereign website. Sovereign.org will get you to that location. In addition, we think there's going to be tremendous opportunities for our industry in the area of smart contracts. That's provided to us by another partner called Oasis. Their platform is XDI. And then also, we need to make sure we are standards-based. There's a number of credit unions out there who all have different cores. We want to make sure we are able to integrate with all of those cores in a normalized platform. Those are the two background slides I have. And now I'm going to introduce Mr. John Best. John is the CEO and founder of a financial technology firm called Best Innovation Group, or as we fondly call it, BIG. John and his team at BIG have done some pretty amazing things since I've gotten to know him. They have developed a financial services-based Amazon Echo platform, and you know a little bit about, based on the previous slides, about the partnership that we have with the Credit Union National Association, as well as my organization, in launching the CU Ledger Network as co-founders. It is groundbreaking, and you're going to hear a lot about that as John pulls up his presentation. It is collaborative. One thing I do want to note to the group today, Rojan mentioned R3 and the size of that organization. Our credit union industry can't match the numbers of dollars in that R3 consortia, but in terms of numbers of participants, the fact is we have over 70 participants ourselves. As Rojan mentioned, there really all industry verticals are trying to launch a blockchain initiative. We are actually one of the largest consortia in the world at this point in time. So with that, the microphone is yours, Mr. Best. Take it away, sir.
John, I'm just going to transfer the control to you in a moment, so bear with me.
Of course. While you're doing that, I'll just chime in here. First, I want to tell everyone it's an honor, and thank you for having us. Rick and I have been looking forward to this. We've talked a lot about this being an international effort, and even when we first formed CU Ledger, I had the blessing of going and speaking with Van City and some of the other bigger, some other Canadian credits that we worked with as well. So we actually do have Van City on our council. So from day one, I wanted this to not be just inside our borders. So I'm going to go ahead and share my screen here in a minute. Let me see if I can manage my presentable content. So you're still showing your desktop, Rojan? If you can stop, then I can show mine. So I think you'll have to click on.
There you go.
Still showing.
So, Johnny, you are the presenter, so you can share your screen.
John, I see the Gartner Hype Cycle.
Yeah, that's not my screen though. But I will. Don't see where I can share. It says Rojan. It says you're presenting. Unfortunately, is there on the bottom? There's a little picture of a screen. If you close out of the presenting, up at the top it says stop presenting right there. Yeah, that's it. Awesome. Yes, perfect. Thank you so much. Sorry about that. So you should be seeing my screen now, and in a minute I'll be jumping into these 5 key points. Rick, can you see where I'm at?
It's loading. Yes, I see your 5 key points.
Excellent. So thank you, everyone. Sorry about that little hiccup there. So 5 key points about distributed ledger technology. First, it's more than Bitcoin. So we have a tendency when we hear blockchain to really just start thinking cryptocurrency. Now, I do think that has subsided a little in our industry, but initially it was a big problem, and people had just sort of written off cryptocurrency. This is not about cryptocurrency. What it is about is a linked set of transaction records. You can think of it like this. For those of you that run the various cores in your credit unions, imagine that instead of just one core, you had hundreds, and every single member's transaction was validated across those 100 cores. Not only that, but imagine that you had hundreds of notary republics. I'm not sure if they have those in Canada, but notaries or accountants, notarizing each individual transaction separately and validating them. That's the other big piece of a distributed ledger. Its value is an increased efficiency and safety in the sense of the data. And then there's a couple pieces to it, one of them being smart contracts, which also will bring efficiencies to to the various use cases, which we'll talk about. So just to kind of move ahead here, here's the hype cycle. So when I first started this, we were somewhere between here and here, which is a problem because if you are here, you're missing that boat. But if you're here, you might be in a little too early, particularly for credit unions with our limited funding. But the way we beat this, and I'm thankful to CUNA and I'm thankful to Mountain West, is we got together and said, let's not do this alone. We're a collaborative industry, and our number one disruptive power that we have is collaboration. So we were able to get together and find our way through this, and by doing that, we've actually determined we're pretty well somewhere here from what we've seen and what we know of what we've been able to move through. And one of the reasons we know that is because we've seen all the money everyone else is spending. They just don't put this kind of money into this kind of tech if they haven't seen something powerful. And that's what drew us to this project was there's got to be something here. And so we were really digging in. And Rick mentioned this earlier. So this is a company called R3. That's how it's known, but that's its website. It's 42 different financial companies. They've lost a few recently. But if you look at bullet point 2 here, this is who's who of the financial industry. Across the world, this is global. Not only that, but one of the groups they just added was a couple of auto distributors. So Toyota is now part of this. So they saw the power of this, and they've pushed forward. They're actually using it in different ways. Last year in March, they had already done a trial. They now have been using Corda and their platform for some time. And so, these guys are pushing forward in a lot of different ways. And if you think about the announcements recently, like Zelle, pretty much every player in Zelle is on this list. So, Clear Exchange didn't really go as well as they wanted. And so I've got to think that Zelle is going to have a play in this as well. For those of you that don't know what Zelle is, it's spelled Z-E-L-L-E. It's a person-to-person's payments platform that was just announced at the NACHA meeting conference that they just had a couple weeks ago. So then there's other organizations, and this one actually I'm proud to say that we are part of now. So this is an organization that's led by the Linux Foundation, so the same open source group that coordinates all of the updates to your favorite Linux products. And they've said, hey, we should have an open ledger project. And if you look, the effort includes some other big firms, the J.P. Morgans, the London Stock Exchange, Wells Fargo. And we have just recently, sort of by proxy of our, as Rick pointed out, our identity platform, been pulled into Hyperledger. We actually had the head guy of Hyperledger, his name's Brian Bellendorf. He also is one of the major architects of the Apache software for the nerds out there. That's the if you woke up this morning and used your phone, you used an Apache server along the way. And he came on and talked to our credit union leadership and told us that this was very validating, and it's one of the reasons that they've been pulled in. So if you go to www.hyperledger.org and you look up Project Indy, I-N-D-Y, you will find some reference to CU Ledger there, as well as you'll find a lot of good information related to the identity piece we're working on. So I said this before, distributed ledger is not Bitcoin. It's actually the elegant underlying technology that enables Bitcoin. So when they developed Bitcoin, they were looking for 3 major things. 1, they wanted transparency. They wanted to be able to validate everything. 2, they wanted no government interaction. So they didn't want anybody, they wanted cross borders, they didn't want it to be owned by any government. And then in the third play, they wanted to have anonymous transactions, which accounts for a lot of the nefarious things that you think about when you think about Bitcoin, like Silk Road and those sorts of things. And if you think about that, 2 of those things are really opposing each other, right? The idea of being transparency and anonymity is really 2 opposing ideas. So how would you create something that does that? Well, a guy got together with some other folks and they figured this out. And honestly, they didn't really know the underlying piece was so important. They were trying to solve a different problem. And he actually, because it was this sort of anonymous thing, the gentleman never actually said his name. He came up with a pseudonym, and he called himself Satoshi, S-A-T-O-S-H-I. So to this day, the smaller unit of a Bitcoin, which, by the way, if you haven't looked at Bitcoin lately, it's through the roof. Currently worth $1,780 a Bitcoin. That's up about 45% in the last few months. But the idea is that if you have less than a Bitcoin and really down in kind of to the pennies of Bitcoins, you would call them Satoshis. But not too long ago, he outed himself, I believe. It's a gentleman from Australia. I think his ego got the best of him, and he said, people should know I built this, and it is quite brilliant. So you should also know it's also known as a shared ledger or a distributed ledger. And going forward, I would tell you that it would be good to refer to this as distributed ledger technology and not blockchain, because the elements of block that are part of this, which I will talk about, aren't always necessarily present in the various distributed ledgers applications that you're seeing, particularly in the bank space. So I'm going to give you a real simple use case, and we're going to talk it through. But at the same time, I want you to know that this use case probably isn't the best use case. This is just the easiest one I found for all of my audience to understand. So we've got Credit Union A and Credit Union B. They want to send money to each other. Let's pretend it's two of you, and one of you is either involved in a loan participation. You've shared a loan with liquidity, or you're paying off a mortgage for a member at a different credit union. However it goes, you're in that midst. Now, if you were to do that today, you'd have to have something sort of living in the middle here, right? You'd have to have a service. It might be, in our world in the United States, it'd be the Fed that would stand in, and that service would provide us with certain elements. That would provide us with identity. That would make sure that the money actually goes to CUB, so I don't have to worry about authenticating CUB and a man in the middle taking it. They would provide us with transformation services. They would say, you know what, if CUA was on this particular system, a core system or a host system or whatever you guys call it, and CUB was on a completely different one, they would make sure that the messaging between the two to move the money would work. They would provide settlement service. That would be another piece, so they'd settle between the two organizations, and they would charge you for that. So if you think about it, a distributed ledger is really a decentralized web of trust, a decentralized network without a centerpiece. So you have to provide those services that the center solution, the Fed in our case, or Visa or MasterCard, provides as part of their service if you want to do business. So what this system will do is allow CUA to directly transact with CUB with no middleman and still include all of those services, and I'll show you how. So the first step is, as we just said, that transformational process. And so in about 2009, 2010, when I used to work for a credit union, I was a senior vice president of Westcom Credit Union in California for a lot of years. We sat down and we worked with a consortium and came up with the idea of COFX. And what COFX is a credit union standard. It's an ontological or a credit union dictionary of terms. It's not a protocol. It's just how do we describe things? How do we make sure that between two systems we say that a late payment is the same nomenclature between the two? So we now found a very valuable use case for that, which is within this network. So Credit Union A, you can pretend is on a Jack Henry product or a Fiserv product, and Credit Union B is on obviously a different one. So the first thing that happens is we get this thing out to the network and we normalize it. We get the data that's out there normalized so that whoever picks it up can read it. The next step is very important, which is the transaction is converted, and I'm going to use this block metaphor, even though that's not always the way it is, but people tend to understand it, into this encrypted block with Credit Union B's public key. So that's another piece that's happening inside of this network is key management. So when Credit Union A said, hey, I want to send money over here, it was able to learn from the network what Credit Union B's public key is, and with that, it has the ability to encrypt a box that only Credit Union B can open, which is really important. That's part of the important piece of this. Now, once that's done, we need to get it out to the ledger network. And in our world, this is going to be a whole bunch of credit unions. And so I want you to look close at this graphic because there's an important piece to this, which is when we see this graphic, we don't see a telephone game. It doesn't go to this credit union. These are all representative of credit unions on a blockchain network, which I'll show you in a little bit. But it doesn't just go to this network and then this one tells this one and this one tells this one and this one tells this one. It's almost as though what we're doing right now, providing that everyone's listening to me right at the moment, I've become a single source of truth. So it's happening all at once. All of these nodes are coming together. And as Rick mentioned in his opening, one of the challenges we have with this is in the Bitcoin world, this takes 6 minutes. That's not going to fly in our world. No member is going to wait 6 minutes for anything. Heck, we can barely get them to wait 3 seconds to log into home banking, right? So we've got to make sure that this was speedy, and we were able to survive that or figure that out. And so each of these guys is learning this information at the same time. Now, another point I want to make about this box. You can imagine this box to be a truck driving down the highway. And if that truck were driving down the highway, and I believe you have these in Canada, there are these weigh stations. And so they pull these trucks over and they weigh them. And when they weigh them, they don't know what's inside them. They don't open or break the bill of lading. All these trucks are sealed. They just weigh them. And they know, okay, when it pulled through here, it weighed 1,200 pounds. And when it pulled through the next place, it only weighed 800. And by virtue of the deductive truth or the deductive reasoning of that, they can say, there's something with this changed. Well, in the distributed ledger world, we have the ability to describe this little box down to its molecular level, and it's called a hash. So that means that everybody got an exact description of this box to where if anybody changed any tiny little detail, anything on one of these, it wouldn't match everyone else's. And again, that's called a hash. So one of the things that we have to understand right away is the distributed ledger doesn't always store data. It can, but that's not its real use case. It's actually metadata about data to prove that this data is valid. And that's what we do with the hash. It's a very small amount of data. You can describe anything digitally with a very tiny piece of data that cannot be refuted. So it's a calculation, basically, and a way to describe it. Now, once everybody's heard this story, we come to what's called consensus. Now, consensus is really important to understand in the distributed ledger world. That means that everybody agreed that the dimensions, the size, the weight of the box, without knowing anything about what's in it, or even who it's going to. They don't even need to know that. They have no need for that. But everybody came to consensus that this happened. This became truth in this network. And they don't have to trust anybody to do that. All we have to do is store this little bit of data. So once they do that, now it can become part of the ledger. And so just like a real ledger, things are tied together. Now, one of the things you'll always hear is that it's immutable, it's an indelible record. But so are our ledgers. It doesn't mean that, it just means you can't delete it, but it doesn't mean you can't put reversing entries into it and things like that. So once that happens, now this is sealed and complete. But what's really cool about the distributed ledger is it has this ability to sort of raise an event, a flag, if you will, and tell somebody else who's listening that, hey, guess what? There is data out here for you. So CUB can pick this up. They're the only ones who can decrypt this box. They're going to see that there's $1 million transaction and that it's coming from CUA. And so they can be very, very sure that they're going to get that money. Now, currently today, we don't have a settlement process in this. So there could be a number of different ways to settle. It could settle through ACH, it could settle through wire, it could settle through a number of ways. But all of that can actually be worked out elsewhere. But because you have such assurance that this transaction is going to happen, and it's a network of our peers, it's credit unions only, CUB can really move forward as though that money's there and pay off that loan or do what they want to do. So it's far different. It's a contract basically between CUA and CUB that says, you owe me this money. And it's very easy because if they said, well, something happened in the network, well, all of these guys have a description of the box. And so if we wanted to sort of make that point, you would actually have to change over half the network. So you'd have to overcome a majority in order to sort of make a change or pretend there was a change to this box or refute a transaction. So that's it in a nutshell. Now I want to dig in a little bit on these transactions a little bit. And the word transaction is interesting because I'm sort of saying there's one in there, but that could be 1,000 transactions inside of that encrypted block or that encrypted segment. It could be your bill pay transactions in a whole, right? So let's talk about how that ties together. So each ledger is tied to the previous ledger via a hash and a unique ID. So the first time something happens, in event order, you get 0, and then you get 1, and it says, okay, well, my previous is 1, and the next one after me is 2, just like a real ledger. Um, each ledger could be, as I said, thousands of transactions or any other kind of data. Entities that need the transaction information are identified through very, very powerful cryptography. So one of the big pieces of these networks is the ability to sort of be a keychain provider. You can think of it as sort of a centralized way, a decentralized, centralized way, I'll go with decentralized way to distribute private key, or pardon me, public keys. You never distribute private keys, but so that everybody can communicate with each other. Which kind of leads to the other thing that Rick said, which is identity, right? We have to prove that all of this happened. So if you think about our transaction previously, 1, we were able to provide assurance that the transaction happened. 2, we were able to prove the identity, and in this case, we proved it with the public key. In other words, if CUB couldn't prove themselves with the public key, they couldn't even open the box or open the packet. 3, we have the sort of, I want to call it insurance of transaction by all the other entities that were involved. And also we had the transformation. We were able to use COFX to translate that message from one system to another. So moving forward, I want to talk a little bit about CL Ledger versus the Bitcoin blockchain. So the first thing you'll hear is that, well, what's this permissionless and permissioned word, right? And if you type permissionless into your Word document, it's going to come up and have a big red line under it because it's not even a word. But what it means is this. In the Bitcoin world, anybody can join it. All of you on the call today could go right now, download the Bitcoin software, and run it on any box you want to run on. And there's no governance to that. It's self-governing, and I'll show you how that works in a bit. So that means it's permissionless, and that's not good for us because as financial institutions, we're regulated, and as a result, the regulators want to know where our data is housed. And so if we were to say to them, yeah, some of this data is, it's across the world, and some of it's in Junior's basement running on his laptop, that's not going to fly. So what do? Well, we take this technology and we make a smaller version of it that we call permissioned. And the great analogy for a permissioned blockchain or a permissioned distributed ledger is your ATM network, right? So in order to build or put an ATM out there that's talking to the switches and can run foreign transactions, you have to certify with a network somewhere. You need to be a financial entity of some sort, and you're going to sign something that gives you reputational risk and possibly even monetary risk as part of your being included in that. Not only that, but you'll be audited like the switches do to make sure that you have the appropriate controls in place. You can think of SSA 18, SOC certifications, those sorts of things. That's what we have to have. And so this ledger network is not open to anyone. You can't just download it, and you have to be certified to be part of it. And as a result, it's much smaller. There isn't as many nodes in that. So in the situation of CL Ledger versus Bitcoin, both are distributed ledgers, and the same data is housed across a number of places. And in the Bitcoin world, there are 3.5 million nodes, which is why people are so, people tend to want to use it, because the hardest part of this whole thing actually is getting the nodes up. It's not so much building out the technology, it's creating the network. And if there's already 3.5 million nodes out there, that's pretty enticing to start something. But it won't work for financial institutions for a lot of reasons, mostly legal. They both have consensus mechanisms to ensure all copies of the data are identical. And not only that, but they're capable of processing data. And we'll talk about that in a minute when we talk about smart contracts. But with CU Ledger, all parties are vetted. So if it is that when we get this up and running and you want to join, it'll be free. But there will be a vetting solution where we make sure that, one, you're following the rules of the Ledger network. 2, that you have the resource to do so, and there'll be certifications and follow up on that. But because there's smaller, there's vetted parties, and we know exactly what kind of processor you have. You think about the Bitcoin network. there's all these kinds of computers, and they're diverse. You could have somebody who has just a mega fast, unbelievable computer, and then the next person over could just have an old slow thing that he turned on. And so it creates all this diversity. But when you create something that's permissioned and you have the ability to control and govern what's out there, you can create some standards that make everything much faster and much easier to do. So permissioned, it means that you have to join it, you have to get permission to be part of it. It's going to be, there's not going to be one blockchain network or one distributed ledger network. There are going to be probably hundreds and thousands of these. There will be networks of networks. The key is that by not fracturing our credit unions and becoming collaborative in this, what we do is we corral our buying power, we corral our leverage, and give us more value, because a distributed ledger can connect to another distributed ledger, and therefore bring the value of that distributed ledger to everyone on the other ledger. And that's called pegging, actually, for those of you that want to look that up. But it's the kind of concept that's going to drive this forward. So a little bit about validation. There's permission to permissionless. In the permissionless area, you've got Bitcoin and Ethereum. So those are products you can download today. There is no such thing as a private permissionless network. It's kind of an oxymoron. But there is a public permission network, and the first of its kind, which is the identity network that we talked about, which is where Sovereign sits. And if you look down there where it says Corda and R3, that's also where CU Ledger would be. So in the validation perspective, we sit in that model.
John,
Yep.
sorry, I'm sorry to interrupt you. I think your screen just locked, so we can't see anything on the screen.
Okay, let me go see what's going on. Apologies. I am network issues interrupted, so let me share it again. Thank you for letting me know. All right, it says it's connecting. Thank you so much. Today's been a lot of technical difficulties. My apologies to everyone. Can you see it now, Rush?
We can, thank you.
Excellent. So validation. So when we look at this, these squares are arranged the same as the last slide, so it looks just the same. But let's look at how they work. So how do we validate the transactions? Well, in a permissionless world, there are no humans involved, so it's all algorithmic. And actually, that has been beat before. If you look up DAO, the DAO, and you put hack after that, you'll find it's not really a hack. What it was is just someone figured out a bug in the algorithm and was able to take advantage of it. Whereas a permissioned, whether it be public or private, is going to have a combination of those two pieces. It's going to have a combination of algorithm and human, and in the private, it's really going to depend on human in terms of agreements, meaning that there will be contracts and signed. But that doesn't mean we're limited to that. It's just sort of getting into the mode of being a network, but then after that, we can create great value without having to have paper contracts, which I'll talk about. So why are they valuable? Well, one, the stored data is guaranteed availability. So if you think about this, if I log into one of your credit union's home bankings or mobiles right now, there's only one system that's checking my password and my username, usually. And so if that one system goes down, then it doesn't matter that bill pay and everything else is running. If I can't get to it, then in my mind as a member, it's down. But imagine you could have thousands of systems checking that password. So it pushes that into a new world in terms of how you can validate things. You can run lots of applications on these and be guaranteed extremely high uptime because you have so many nodes. You can run them very high into the future. So you look at people think about the space like, oh my goodness, we're going to have this huge pile of data. But if you look at the Bitcoin network, which has done millions and billions of transactions at this point, it's only 80 gig. Most of us have flash drives that are bigger than that. So it's not a ton of data, and it's easy to store it for a long time. You can run applications on them, and because of the consensus mechanism, people believe that they're very honest. One of the things you'll hear a lot about with distributed ledgers is voting and the democratic process. That will come to pass. It just makes too much sense. But you're always going to sort of hear about that. And I'll talk a little bit about that from the smart contract. Imagine that we took a vote right now, and Roshan had, imagine we were all in the same room, and Roshan gave everybody a little sliver of paper and said, write down your vote, and he put them all in this hat. And then we have to trust Roshan to go and sort that hat and do all of the calculations on that. Well, what if we could magically replicate that hat for every individual in the room, hand it to them, have everybody count, and then take a look at the consensus of the group. So what that would do is it would create more honesty because we don't have to trust Rojan to be the counter. We all get to count the votes, and majority wins. So if someone miscounted here or there, the likelihood of all 1,000 of us miscounting is low. The other piece is that there's 100% reliability of talking between these two platforms. And the reason for that is because of the number of nodes, the diversity in the network, and that gives you a high up rate, which has been something that we all want very badly. And you can build applications that take advantage of this, right? The key is figuring out what applications are important. So you see combining payments and reputation systems is a huge gain, which we've seen from a lot of people. But why is this tech a perfect fit for our industry, and why are other people struggling with it? Well, if you think about our industry, one of the biggest values, one of the biggest core values we have is collaboration. The other thing is we're not all the same. So the dots on the left represent a single bank, say Wells Fargo or Royal Canadian or whoever. They're not going to have much diversity because they're one entity. But if you think about our credit union network, every one of us has different firewalls, different load balancers, different servers, different underlying software. And so if a hacker were to get a hold of one of these, they could, once they have one burn, they can get into all of them. Whereas in our world, if you get one, you're really only going to get maybe 3 that are close to being the same. And in order to overtake this network, as I said before, you got to get 52% of these nodes, which would be extremely difficult even on the bank side. So it's got a lot of power, but it's really custom made for our industry because of our collaborative nature. So a couple security key points. One, the data is encrypted by the most current encryption standards. And I want you to think of it like this. Imagine that I took your username and the password and I had it on a piece of paper. I ripped up that little piece of paper into a million little tiny little bits. I took each one of those little bits and I put it in a tiny safe. And each one of those safes I gave a different combo to. And then I spread those throughout all your credit unions. And then I went back through and I had a whole bunch of safes that look exactly the same as the safes that have the information in it, but they have nothing in it. And I sprinkle those through. So even if someone gets a hold of a node and they break into it, and they get somehow, which has never been done, they get past the elliptical curve 25519 with quantum computing or something. They get a 10 qubit machine or something. And once they break through that, all they would have is, if they were lucky, a piece of uncorrelated data. And it's even just as likely they would have nothing, literally nothing in there. So that's really important to understand the distributed value of this. And also, because there are so many nodes, there are masters, there are slaves, there are backups on both sides of it. So this data is duplicated. So just getting one system is not going to take a bunch of those safes away. You'd have to knock down a whole bunch the way it's done. But I want to just go through a couple things not to use a distributed ledger for. So people think it's like a big database, and it's absolutely not. I was having a great conversation with David Bannister about this, and one of the things that a game we like to play is called database or distributed ledger, right? And about half the time, any idea anybody comes up with, we can go database, and there's no reason to do this with a distributed ledger. So, for example, storing pictures. Why, you wouldn't store pictures on these this way. It's not a good way to store pictures. However, if you wanted to store a hash, if you remember, we talked about that being a digital description of a picture. If you wanted to store a hash about that picture to prove that that picture is exactly the same as it was when you took it and no one photoshopped it, then that would be a fantastic use case. But storing the actual picture in that platform is not useful. Some people look at it and go, well, gee, it seems like we could use that for collections, or we could use it inside the credit union. At this point, I haven't really seen any good use cases for, say, taking all the PCs in your credit union network and turning those into a ledger. I don't think that would be very valuable. It could be proven wrong. Somebody might come up with a brilliant neural networking idea or an artificial intelligence idea. But right now, it's just more for these sort of back office and those sorts of plays at the moment. It's not designed to run a home banking system. It isn't a home banking system. It has some use cases that home banking could definitely use, but it is not a platform in that way. And you'll see in a bit what that looks like. It's also not any kind of analytics toolkit. So it's not made to crunch numbers, even though it does have the ability to do those smart contracts. And it's not about machine learning. It's simply a bunch of connected ledgers with logic that allows them to be very secure and to come to consensus very quickly. So we'll talk a little bit about the C ledger concept now. The idea was we wanted to create a specialized credit union ledger. We wanted to remove all the barriers. We didn't want anybody who couldn't get into this. We wanted everybody to be involved because we knew the more nodes we have, the more valuable we'd be. For the first time in our lives, we wanted to normalize the platform before we start using it. So that's what COFX was all about. Let's not, do what we normally do, and some people do this and some people do that, and then eventually it's sort of you think about ATMs many years ago when you used to have to look on the back of the card and look at all the little bugs, the tiny little pictures, and then look at the gas pump and go, I wonder if these will work. And I'm not sure you had that sort of convergence in Canada, but we certainly did in America, and we're trying to avoid that here. We want to create interoperability regardless of cores, third-party products, or platforms. We want to reach adoption and implementation sooner rather than later, and I'm proud to say that we're on the track now to deliver a business plan by July and have, for the app I'm going to show you, have the first credit unions online. So let's look at a couple of the applications that we looked at. The first one was identity, which there was and that's the first actual one I'm going to show you today. So I'll leave that one last there. But the next one was lending. We really looked into lending. We found a lot of use in indirect and loan participations, particularly in matching credit unions with high liquidity and with credit unions or with high loan volume. So there was a lot of opportunity to share that. And if there are any CFOs or anybody on the phone that's been through that process, you know that one of the biggest challenges is what's the actual balance of the credit union, right? And so of the loan. Well, a ledger could keep track of that. It could do the disbursements. It could keep the reporting all together. And it could create a bidding mechanism that's very fair for the loans that are put out there. So you could think about doing a $25 million commercial loan that you put out into the ledger and find 10, 12, maybe 15 participants who have liquidity that want to invest in that loan with you. So very valuable stuff there. And then it's really tailor-made as well for money movement. You look at like Ripple and some of the other products out there. It's a ledger, and a ledger's power is in tracking transactions as they relate to a previous balance and having the ability to reverse those and put them in. So we all know the story of the ledger. So let's talk about identity. One, we have a growing password crisis, and if you don't think it's a crisis, just have some fun and pull up one of your sites and look at how many different passwords you have. Amazon, Hulu, United, all the airplane industries. Now we're starting to collect up these merchants and IoT devices, but it's going to get resolved. Two, identity is a disruptor, and it's a hot topic in every industry right now. The current group we're working with is working with the DHS. It's working with the OPM. They're working with a lot of people because identity has become such a hot topic. All their identity plays have failed so far, and here's why. You may have we've seen log in with Google, log in with Facebook, log in with LinkedIn, and what we know is that when we use these tools, they use the information sort of against us. They correlate it, they sell it, they go, well, gee, John's part of Zappos, let's sell that information to some other shoe company, or my wife is, and see if they're interested. So that's been a challenge. The other thing is that Google, Microsoft, Facebook, they don't check your IDs, and we'll get to more of that later. Banks have explored this but failed because they wouldn't work together. They actually looked into this years ago during the Clear Exchange piece several times. And so far we haven't seen really a concerted effort because they are struggling with what we call a captured business model. And I'll give you an example. Who's bill pay? Most of you, I'm assuming, have bill pay, and you have payees. So your members type in, the different people they want to pay. Most of the time, those are captured and they are stored in your system, and the members can't get them back out. That's a captured data model. And it ensures that member stays with you. As a matter of fact, we even have a term for it. We call it sticky. But that sticky thing isn't going to work much longer because data is about to get set free. And we're seeing it in Europe already. If you want to look up something, PSD2, you guys, I would imagine, Rojan, are you guys under the EU in that sense in terms of the banking piece? Is PSD2 something coming this way? I hadn't thought about that. While he's unmuting, I'll keep going. But this opportunity is wide open. No one solved this. And even if we fail to grow this beyond the credit union industry, and what I'm going to show you is something where we want to see this grow into a lot of different places. We hope that major retailers, major restaurants, everybody will pick this up. So here's what we have today. So if you want to log into Amazon, you got to go and give them your information, and they kind of become this kingdom that they let you in. You got to give them your, your billing address, your shipping address. You got to give them all of this data. And what's interesting about that is, and I'm not suggesting that this is where we're headed, but it's a thought process, is does Amazon really need to know your address? And you may say, yeah, they do because they got to ship me stuff. But my answer to you would be, really, the post office is the only one that needs to know your address. There should be some pseudonym or cryptonym in there so that your address isn't out there and the post office knows where you are. But this is where we are. And if you think about all these other systems that we have data in, it creates a huge mess because we should be the big dot. And if we were the big dot, then people could subscribe to us. And if they subscribe to us and we're the ultimate source of our information, then when it changes, it would just change everywhere. So that's what we're seeing. It's called sovereign identity. So I'm going to show you a bit on the demo here, but I want you to consider this. When we think about Facebook, Google, LinkedIn, Twitter, all of these guys, what did they really do to prove who you are? And the answer is nothing. But as financial institutions, we had to check your license, some sort of ID. We had to go through some regulatory steps. In our world, it's OFAC, right? It's making sure that this stuff isn't going through to terrorist identities or terrorist entities or anything like that. We checked your credit when we pulled it. We performed the KYC information, which, by the way, if you go out to American Banker, there's a great podcast talking about community banks and the fact that they can't ignore this because this stuff takes changes in your processes. And so it's huge to start thinking about these things. And I'll explain that in a minute. We looked into your eyes. Well, you were likely in front of us at some point. And we can attest to all of these things on your behalf. So how can we leverage this? And so one of the things, as I mentioned before, we joined the W3C, which is the governing body of the internet, and they're working on something called verifiable claims. So let's look at it in our world. When we want to give someone a loan, sometimes we have to ask for stipulations, and those stipulations include payroll. Well, what could we do with that if we could, right now, if I got to do payroll, I got to go out, get my pay stubs, and send them to the credit union to get the loan. But what if my employer had an identity as well? Because keep in mind, identities aren't just for people, they're also for the institutions that are out there and the entities. So now my employer could say, which is Big, could say, yes, John is an employee of Big, and I'm willing to attest to that and sign digitally in a way that you know for sure it's Big. Imagine the speed that we could gain. Imagine that you as a credit union didn't have to do KYC because a trusted entity did already. And that's some of what's going to happen with PSD2 as well. So let me explain this in a little clearer terms. So on the right, we've got, I think it's Digital Mike and Digital Susie, I should look. And on the left, we've got your credit union core system. So imagine that we took those identity attributes and we pushed them out into our CO Ledger network, which also talks to Sovereign. And then we created these little boxes where your information was, but the only person that can get to it is you because you have the key. And that key is tied to a biometric. So if we think about the Wells Fargo incident that just happened recently, they failed in 3 points. The first one they failed in is consent, which you'll see in my demo. We're going to fix that, which means that their staff had access to get to be able to get a credit card on their behalf. And the member had no idea that it was happening. The second place they failed was notification. So the notification happened where it was sent through the mail, and what do we do with mail from these guys? We just dump it, right? And the third one was audit, and it just looked so prevalent to audit that they thought it was normal. So imagine that anytime anybody tried to do anything with your identity, it would check with you first and not by a password. And I'll show you what that looks like in a minute here. So today we have one credit union that validates, or one core system that validates your identity. But what if you could have hundreds? Then that would make sure that we were up. And also it's far more secure because in order to to do anything with this, you'd have to have all of these systems. And as I said, the digital universe isn't just made up of people. It's made up of people who have assets. You look at IoT, and you look at entities and have assets. So the credit union will have a digital identity. It'll pave the way for B2B payments, B2B2C payments. It'll create efficiencies with smart contracts and identity. You'll use it to log into your corporate network and communicate between credit unions. It'll reinvent something we have here called shared branching, because it creates a portable identity that's reusable. So why is this worth considering? Normalizing our authentication methods will reduce integration for cost. It'll improve the speed to market. It'll improve security, and it creates a sponsorship and a value proposition for people in the world to be able to get these identities through the credit union brand. And what happens is the person that brings this person into this world, they're going to be the leader in that. They're going to be the sponsor of that member for a long time. There's also the ability to look at non-interest income through this. So right here, I'm going to stop for a minute. I'm going to actually show you the demo. So first thing I'm going to do is I'm going to bring up this little thing. And I want you to see that this is a call center app. So imagine that your call center person is sitting in their call center place, and this is what their piece is. So I'm going to go ahead and bring up my phone. And so we'll see that in just a minute here. It pops up. Come on, buddy. There it is. So that's my phone. So let's pretend that the member already has an app on their phone. And in this case, it's the Connect Me app. And here we are. I'm going to move it over here. I'm going to make it a little smaller so you can see it. But as you can see, that's my phone that I'm literally using. And I don't have this connected to a core, nor do I have it connected to a call center. So I kind of had to fake up some users. So imagine that your call center representative picked up the phone, and when it rang, just like it does on their other stuff, the screen popped and said, there's your member. Here's information, and I'll talk about this threat info in a minute. But the important piece on here is that you can see that this person has a sovereign ID. Now, how do I know that? Because this is yellow. If it was red, it means they weren't enrolled. If it's green, it means I validated them. So today, when I call some of my credit unions, I have to tell them the last 5 purchases and all these things I made. And now, on the bottom left, where you see my phone, that's where I'm going to validate this person. So imagine that you're on the phone with them, and you say, Mr. Reed, I would like to validate you. I see you're enrolled in Sovereign. He says, yep, that's my favorite way. You click the button. You say, yeah, that's what we're going to do. So the phone will switch in just a minute, and it says, hey, he wants to connect with me. Okay, well, that's great. Now, you can't quite see it because I've got this little reflector thing, which is part of my technical difficulties. But underneath this, it says deny, and the green says approve. So I'm going to hit the approve. And when I hit the approve, it says, okay, well, let's check your Touch ID. So I'll do that. And the moment I did it, you can see that this said, hey, you're good to go with this guy. He's real. This is actually him. Now, it also told me as a member some information. It told me information about Suncoast that's good for me to know. It also said, I'm talking to John Best, is my service rep. Now, we don't have to give the actual names out. It could be agent IDs, but how many times have you gotten on the phone with an entity who said, hey, who'd you talk to last? And you don't know. But let's take it in a different place, right? So we have an obsession here, or pardon me, we have a trick here where we're going to go in, we're going to switch to a bad guy. So imagine that this person is trying to steal this member's identity. So we're going to log in, and the first thing we're going to notice is there's this threat index here. I'm actually going to make it bigger so you can see it this time. So we can see that there's a threat index here. This threat, because of the nature of the blockchain and all the credit unions being pushed together, this threat is actually from a different credit union. So what it says is this call that came in is on a stolen SIM card. So what that means is that this call center representative now knows right off the bat that there may be some potential fraud with this. And it was reported by a different credit union. And trust me, these guys reuse these numbers that they hack. So now we go through and we say, well, Mr. Reed, I'd like to authenticate you, knowing it's not Reed on the phone, or maybe it is, and if I click it, and let's say I'm Reed, I'm Drummond, so when my phone pops here in a second, I'm going to go, well, gee, I'm not on the phone with Suncoast. Imagine this if this was the Wells Fargo app, and it popped up and said, someone's trying to open a credit card in your name. So I would just say deny, and when I say deny, it says, well, let's make sure it's you. And now we can see that this was not, you're not to proceed with this transaction because the member authentication was denied. And that's how fast that can happen. Now I'm going to switch over just one other place to show you just a couple things, just so you can see the magic behind the scenes. There are 8 nodes running this. So I'm going to bring up those 8 nodes and show you a little about what that looks like, and then we'll close out here. So I'll just bring up 2 of them. There are 8 more behind this, but each one of these is talking to a ledger. So if I go here and I look at the call center app, and remember we talked about this being sort of an app store. So here's the call center side of it, which has the threat information exchange and how it all works. And then here is the over here is the other side of it. But let's actually look at the ledger. Now, typically this would all be encrypted, but I want you to see it because I want you to see how fast it could go. So you can see here are things that happened just minutes ago on this particular system. And you can see the threats, you can see what happened, you can see the data was stored. And then over here, if I update, you'll see the same thing. You'll see, but from a different perspective. So these are two different pieces in here. There's a fraud attempt during the call detected, and it has the ability to automatically record that. So this could change the game. And as you can see, when we look at this identity and we go back to it, it's, once you've got it, you could use it at EDCU. You could use it at all these different places. So I'm going to jump back over here. And for anyone that's really interested in this, they can call Rick, and we'd be happy to do a further demo. But I'm just going to close out with this, which was the last piece here, which was the point that if we can improve the speed, improve security, and create something that a model that people can build on top of, it becomes sort of a platform. And when you have a platform, that gives a lot of people the opportunity to innovate on it on our behalf. And that's what we're hoping to see from this. We think that our ideas are good, but like the App Store, Apple only had 2 or 3 apps in it when it first came out, and they were all written by Apple. So that's what we're doing, is trying to seed this a little bit so that people will see the power of the identity, of the ledger, of the smart contracts, and then start building on top of this or porting their current products to it so that we can get more scale and more opportunity. So I'll turn it back over to Rojan. Thanks, Rojan.
Thanks, John and Rick, for enlightening us. This was great. And to all of you for joining today, thank you very much for your time. Since we are kind of at the top of the hour, I'd like to close the call today. We'll take questions offline. We'll make this presentation available later. But as I said at the beginning, the intent of this session was just to create an awareness. We know that time was of essence here. We couldn't go into the details. Well, we might be coming up with follow-up sessions. So stay tuned and watch our solution newsletter. We'll announce more webinars, and as we build our partnership with the CU Ledger Consortium, we'll bring more of those webinars to you. So once again, thank you very much for joining us. Hope you have a good day. And if there are any questions, please email me, Rojin, ROJIN.Nair, NAIR, at CELERO.ca. So we'll take questions offline, and we'll try to address them one-on-one. And if there's next session coming up, we'll announce that soon. Thank you very much.